I've just finished developing the only forex trading strategy that you will ever need in order to become a profitable trader. In this video, I'm putting this exact strategy to the test, backtesting it for 1 full month in front of you. It's a strategy that I have been recently testing and tweaking because I want to use it on my trading accounts and also in my trading group. By the end of this video, you will see exactly whether this strategy suits you as well and why it will be my go-to for sending trades in my community. Now that we're on the charts, the first thing that we're going to do before we jump into the backtest is we are going to discuss about the exact rules of this strategy. Basically the rules that we need to follow in order to apply this strategy properly and make good profits with it. First things first, we need to understand when are we going to trade this strategy? What is the trading window of this strategy? It's very simple. 9:45 till 12 New York time. That's gonna be the trading window from Monday to Friday, right? So you can easily convert that to your time and find out exactly when you need to be active on the chart for this exact strategy. Secondly, what will be our entry time frame? The entry time frame will be the 5-minute time frame for this exact strategy. And the pairs I would recommend you guys to trade with this strategy are as following. US 30, the pair that we're going to use for today's video, NAS 100 or NASDAQ, GBP USD and Euro USD. These are the 4 pairs I would personally suggest. And now I will show you step by step the things that we need to look for in order to take trades with this strategy. I will use the bar replay mode and show you an example. And after this example, after you guys understand the strategy, we will then jump into the backtest. So right here, what I would do is I would open the chart at around this time. As you can see, it's 4 p.m. my time, which means 9 a.m. New York time. And now you might be asking, well, why are you on the 1 hour time frame? That's the next step. On the 1 hour time frame, what we need to identify is liquidity levels. What do I mean by liquidity levels? The liquidity levels are basically valid highs and valid lows. Now you might ask, well, how do I identify a valid high? A valid high occurs when we have at least 2 candlesticks of the same exact color in a row, right? We need to have something like this. We need to have a move to the upside and then 2 bearish candlesticks in a row to the downside in order to create a valid high. Now, for a valid low, when price is moving down, right, we need at least 2 bullish candlesticks to the upside in order to create a valid high. So these are basically the liquidity levels that we need to identify on the hourly time frame. And right here, we find ourselves on the hourly time frame. And from the get-go, I saw that we had a very important liquidity level here and another one right here, okay? These 2 lows are very good liquidity levels. And then of course, if we were to pick a high as well, I would pick this one here. So after we mark our liquidity levels, we then go on the 5-minute time frame, okay? So let me go on the 5-minute, and on the 5-minute, we need to wait for one of the liquidity levels to be taken out, okay? And we can see that this one right here was taken out right when the New York Stock Exchange opened. So now, after a liquidity level gets swept, we need to look for the next thing on the 5-minute time frame in order for us to get our entry. So what do we need to do in order to look for a potential entry? On the 5-minute, what we need to wait for now is an aggressive market structure shift. Basically a shift to the upside that leaves imbalance behind. So let's see if we get that. Let's play the price. Let's see. Okay, the price is moving lower and lower. Let's continue. And let's see. Okay, right here, we have a market structure shift. Why do we have a market structure shift? Well, we apply the same exact rule here as well when it comes to the valid highs and lows. So right here, we had a valid low. Okay, so this right here is our valid low. Then if we move higher, the first valid high is right here, okay? Then we created a valid low right here, and from there, the valid high was broken, okay? So right here, we have an aggressive market structure shift. And why is it aggressive? Because imbalance was left behind. This is very, very important. If we don't see imbalance, the market structure shift isn't valid. So right here, we can see that we have this fair value gap right here, okay, and we have another fair value gap right here as well, okay? In this case, we will enter to the nearest fair value gap. We will place the buy limit right here. This is the next step, okay? And the stop loss will be right below the low in this case because it's a buy, and if it would have been a sell, then it would have been above the high, okay? these are the rules for the stop loss when placing the trade. And then in terms of the take profit, always at 1 to 2. This is what I like. Of course, you guys can feel free and use a different risk to reward ratio if you want to, use a smaller one if you want to have a bigger win rate, or use a higher one if you want to have a bigger risk to reward. Okay, I personally prefer the 2RR. So now we just need to wait for the buy limit to get triggered. Right here, it formed another fair value gap. And in this case, when we have 3 fair value gaps, I would still take the middle one. Okay, this is also part of the rules. If we have 3 consecutive fair value gaps, we will take the entry on the second fair value gap. And if we have 4 fair value gaps, we will disconsider the entry. Okay, so right here, let's quickly recap. We have 1 fair value gap, we have another fair value gap, and then we have the 3rd fair value gap that has been just mitigated right here. When we have 3 fair value gaps, we enter in the middle. So our entry still remains here. So let's play the price. Right here, it triggered our entry. And now let's see how it played out. Let's play the price. And we can see it was a very beautiful trade. It triggered us and smashed the target. So these are pretty much the entry rules for this exact strategy. And now we are ready to hop onto the backtest. All right, so for the backtest, I decided that we should backtest a month where the volatility isn't really where we want to. For example, the month of January. That's the exact month that I decided we should backtest in today's video. We will start with the first day, basically the first day of the year. The reason I decided to backtest January is because if we have good results in a month like this, then it means that in a month like, say, November or October, when the volatility is where we want it to be, we will definitely have good results as well. So this is exactly when I would open the chart. And the first thing that I would do is I would mark up the liquidity levels. We have a liquidity level here and we have a liquidity level here. Now let's wait and see if either one of the levels would get taken out. And the answer to that is no. We can see it's 8 p.m. here. Now we can remove the drawings and move on to the next day. Okay, let's move on to the next day. And perfect. What do we have here? First things first, we have a liquidity level here. And I would say that we have another liquidity level right here as well. And we can see that this one has been taken out. And now on the 5-minute, I will look for a market structure shift. So the price is moving lower, okay, moving lower. Let's see. Okay, we created another high here. Let's see if we manage to break it. Okay, we broke the high right here. So we have a shift right here. Now let's see, do we have a fair value gap? Yes, we do. We have a fair value gap right here. And now we can place the buy limit on the fair value gap. We can see we are still in our trading window. We can still take trades. And right here it triggered, okay? Right here it triggered our entry. Stop loss would have been below the zone. And the take profit would have been right here. So let's play the price. Okay, perfect. We have a win. So let's quickly note this down as well. We have plus 2R on 3rd of January. Okay, perfect. So we have a win. Now we can move on to the next day. Let's continue. We have the 4th of January coming next. All right, we are here. Now, let's see, what are our liquidity levels? So we have a liquidity level here. And we have another liquidity level right here. Okay, now let's wait and see if either one of these two will be taken out. Okay, the upper one was taken out, really beautiful. And now on the 5-minute, let's see if we have a shift. Let's see if we have a sweep. Okay, price is moving higher. Let's continue. All right. We have a shift right here, but let's see how many gaps do we have. Okay, so we have a market structure shift right here. Oh, but check this out. It's 7:20 p.m. So no trade today. It's out of our trading window. Let's move on to the next day, which is the 5th of January. All right, we're almost there. And okay, perfect. So here we are. This would be a valid liquidity level as well as this one right here. Let's see. Let's stay on the 1 hour. Okay, so the upper one has been taken out. Now on the 5-minute, let's look for a aggressive market structure shift. All right, so we have, do we have a shift here? Yes, we do. So check this out. We have a high, we have a low, we have a high, and we broke the low right here with this market structure shift. We also have a imbalance right here. It's a pretty small imbalance, but an imbalance nonetheless. And now we would have the sell limit right here and the stop loss above the high. Okay, let's see, and the take profit at 1 to 2. Let's see if this setup triggers. Okay, perfect. Oh, it looks like it's running away from us. We have another gap here. So now that we have a second gap, we will adjust our entry to the second gap, have this entry right here. And in this case, I would place the stop loss right here. I wouldn't place it above the high because we created a high here as well. Okay, so let's see firstly if the setup gets triggered. And no, it looks like it ran away without us, which is perfectly fine. Nothing to be worried about. Now let's go back on the hourly and move on to the next day. US30 is only one of the pairs that I will personally trade and of course send trades on in my trading community. And on that note, you should feel free to join it. It is the first link down below in the video description. Now we are here once again when we need to look for liquidity levels. This would be a liquidity level, and this right here would be another liquidity level. Okay, so now let's see if we get a sweep. Yes, we do, to the upside. And now we go on the 5-minute. Let's see. And we look for a market structure shift, an aggressive one. Okay, price is moving higher. All right, so check this out. We have a low, we have a high, and then we have a shift towards the downside. Oh, but it's out of our session, 7:20 p.m. Okay, so we move on. We move on to next day, and let's see, 9th of January. And now we need to look for the liquidity levels. We have a liquidity level here as well as here. Let's play the price. No liquidity level has been swept. Now we can move on to the next day. All right, so we're here. We can see that we had a liquidity level here that has been swept just now. And we have another one right here. So now we can go on the 5-minute and look for a aggressive market structure shift. Let's see. We have no shift for now. And it's the end of the session, 11th of January. And we are here. Perfect. Let's look for our liquidity levels. We have one here. And we have another one right here. Okay. Okay, nice. The lower one has been taken out. And that now we go on the 5-minute. Also, a very important thing to note is that it is very important to use a proper risk management with this system, okay? No matter how accurate it might be, if you decide to risk 1% on one trade and then on the other one risk 3% because you feel more confident, trust me, it won't work. So decide what your risk will be every single trade and stick to it. And of course, for more trade management tips, as well as one-on-one sessions, you should click the second link down below in my video description and apply for my mentoring program. Now that we are on the 5-minute time frame, let's look for an aggressive market structure shift. Let's see, the trading session ended. We can move on to the next day. All right, we are here and we can see that we had a liquidity level that was swept and the second liquidity level would be there. So now we can look for sell positions. Let's see. Can we get a setup? In this case, check this out. Theoretically, we have a market structure shift right here, right? But check this out. We have one gap, we have two gaps, we have three gaps. We have, I would say, oh, the fourth one is here. So we have 4 fair value gaps. If we have 4 fair value gaps, we won't look for a setup anymore. Let's see, maybe the bottom liquidity will be taken out. And looks like it won't. So we can move on to the next day, which is the 15th of January. And right here, we have a liquidity level here and another one right here, I would say. Okay, now let's go and see no sweep. Let's move on to the next day. Right here, we can see that we have a sweep already. It swept that low. And then we have another liquidity level there. Let's go on the 5 minute now. Let's go on the 5 minute and see if we have a entry. Okay, so no market structure shift yet. Still no market structure shift. And I don't really like how this setup looks like because it moved a lot to the upside. Bear in mind, it's January, okay? And no trade. It's January, the volatility isn't great, but I decided to backtest this month to show you guys how the strategy looks even in a month where the volatility isn't where we want it to be, okay? So right here, we had this liquidity level that has been swept, and this one would be the upper liquidity level. So let's go on the 5 minute and let's look for a market structure shift. Oh, and we have it. We have it right here. Okay, so check this out. The price is moving to the downside. It swept the liquidity. It had the first market structure shift here, okay, but there was no gap, so we needed to wait. And then it had the second market structure shift right here. And this time we have a gap as well. Very beautiful gap right here. That means that we will take a buy limit right here. The stop loss would be right below the low, which is right here. And then the take profit at 1 to 2 risk to reward ratio. Okay, let's see if this setup triggered. Yes, it triggered right at 16:45 when we would start trading for the day. And now let's see. Perfect. Let's go. Let's go. TP smashed right here. Now we have another win. So 17th of January, another win, +2R. Now let's move on to the next day, which is the 18th of January. Okay, we are here and check this out. We already have a sweep. Price swept this liquidity level right here. We have another liquidity level up here. And now let's go on the 5 minute. Let's see. Can we get a market structure shift, a aggressive one? Okay. Do we have a break here? Let's see. No, we don't have a break there. We don't have a market structure break. So let's continue. Oh, here we go. Now we have a break. So let's see. We have a market structure shift here. We have a fair value gap right here. And do we have another one? Yes, we do. We have a second fair value gap here as well. Now, theoretically, we could take a buy limit here. But personally, I wouldn't take it. And I will tell you exactly why. So check this out. Stop loss would have been here. And take profit would be at 1 to 2, which is way higher than the upper liquidity level. And this is the exact reason why I wouldn't personally take this trade. But let's see. Maybe it would have played out well. No matter the outcome, I will not take this trade. Even if it's a winner, I will not note it as a winner. So let's see. Okay, looks like it's a back and forth. Okay. Looks like it's heading higher. I guess we missed a winner. We just missed a winner, but like I said, I personally wouldn't have took this setup, okay? And I told you exactly why. But yeah, you could say that we missed a winner. It's all good. Like I said, I decided to not take it and we just move on, okay? So we are still at 4R for the month. Let's continue. If you would have risked 1%, basically you are up 4% so far. Only by trading this exact pair. Because like I said, I will trade 6 pairs using this exact strategy on my accounts, and I will send the exact trades in my group as well. Okay, so doing that, I would expect anywhere between 15 and 20 trades a month, which is pretty much 1 trade a day. Now let's continue. We are here. Okay, so we have a liquidity level there. And we have another one right here. Okay, so let's see if either one would be taken out. Oh, this one was taken out right here, but it's out of our trading window. So let's move on to the next day. We are approaching the last part of the month, 22nd of January. And here we are. We took this high here. Okay. Then we have another liquidity level here. And now we go on the 5 minute. Let's see on the 5 minute if we can get a aggressive market structure shift. Okay, we have a low here. We have a break of structure right here. And we also have a gap. We also have a fair value gap right here. Now the sell limit would be right here on the next candle. The stop loss above the high and the take profit at 1 to 2. Okay, let's see. All right, triggered us right here. Let's see how the trade plays out now. All right, nice. And let's go. Winner. We have another winner. Perfect. So this is the 22nd. Wow, really good month. Knowing it's January, so another win, another +2R. And bear in mind, we missed that win that I didn't decide to take. But again, it was based on my rules. So for example here, right? Check this out. What I liked about this setup is not only the market structure shift, but also that the opposite liquidity level was far away from our entry. In the setup that I missed, the winner that I missed, the liquidity level was too close for the trade to play out because the take profit was miles away from it. And that's something that I don't like and I don't take. But yeah, still a really good month. I'm not gonna lie, considering it's January. But let's move on. Let's see. All right, 23rd of January. Here we are. Okay, we have a liquidity level that has been swept right there, and another one right here. Okay, so now let's go on the 5 minute and look for a bullish market structure shift, a aggressive one, of course. Okay, we have a high there. Let's see. This is no shift because it's not a valid high. And it's out of the session. Let's move on. It's out of the session. We can move on to the next day. To the 24th of January. Okay, so here we are. I would say that we had a liquidity level here and this one has been swept. Okay, and another one would be there, but it looks to me that it's pretty far from the so we have a shift right here. And now let's count the gaps. So we have one fair value gap here that has been mitigated. We have another one right here that's unmitigated. And we have another one right here that was unmitigated. Okay. So in this case, our entry would be on the second fair value gap. This would be our entry here. The stop loss, this time I would place it here above the second leg because there's no more imbalance there. This one has already been mitigated by this wick here. And then the take profit would be at 1 to 2. But again, same story as before. What I don't like about this setup is that the take profit is away from the opposite liquidity level. And this is something that I do not like. So I wouldn't take this setup. I wouldn't take this setup. Let's see how it would have played out. So here it would have triggered. Okay, let's see. And come on. Oh, no way. No way we missed another winner. But let's see. I mean, if we missed it, we missed it. And check this out. This is what I don't like. I wouldn't like to spend so much time in a trade, knowing we are trading on the 5 minute, that we are day trading, okay? It entered here and it's literally 5 hours. It's literally been 5 hours. So let's see. It looks like, yeah, it would have been a winner. But again, I personally wouldn't have took this setup, okay? Because of the reason that I told you. Price could have literally swept this liquidity level as well and then moved to the upside, okay? More often than not. These cases were some rarities, and to be honest, the results are very good anyway, so there's nothing to complain about, knowing it's January. So let's move on, okay? All right. So a big sweep right here. The next liquidity, the bottom liquidity level would be that. Now let's see if we can have a sweep, a shift, sorry. Okay, we do have a shift here. We do have a market structure shift right here. And we also have a gap right here. Okay, so we would have our entry right here, stop loss above, and the take profit, let's see, where would the take profit be? Take profit 1 to 2. Okay, so in this case, I would go on the 1 hour. I would go on the 1 hour and I would look at the 1 hour to see, okay, do we have something to mitigate down here? And yes, we do, but the price could react from this gap as well. So I would personally not take this setup either. Okay, so let's see. Maybe this would have been another winner. Oh, but wait, we have multiple gaps. So we have another gap here, another one here, and another one here. So we have 3 gaps. So the entry would be here on this second gap. Okay, this would be the entry. Okay, this is where it would have triggered, but again, I'm not taking this setup. Look at how big the take profit would be, and it would be past the bottom liquidity level, which I don't like. Okay, I would like it to be within the range. This is something, again, very important. I would like the take profit to be maximum at the other liquidity level, okay, but not past it. This is something that I don't like. So let's see if we avoided a loser, or if we missed another winner. Okay, let's play the price. And to be fair, I literally do not care if it is a winner again. Oh, this time it was a loser. This time it was a loser. Okay, so again, these are the rules, and the rules are made to be respected. Okay, so now we can move on to the next day. We're almost at the end. So let's see, Friday 26th of January. So a liquidity level here, and this one is the bottom liquidity level. The upper one was swept. And now on the 5 minute, let's look for the market structure shift to see if we get it. Okay, let's continue. No shift yet. We do have a shift, but check the time. It's 7:15 p.m. Okay, we do have a shift here, but it's 7:15 p.m. and our trading session is over basically, so we wouldn't have took this setup. Now it's Monday. Okay, it's Monday, and this was a solid month, I'm not gonna lie. Knowing it's January, 3 trades, 3 wins, this is really good. On average, you should expect anywhere from 4 to 5 trades, or 3 to 5 trades a month per pair. Okay, so here we are. Let's see, we had a liquidity level here, and we have another one right here. Now we go on the 5 minute, and on the 5 minute, we look for our market structure shift. Okay, we look for our market structure shift, and we have it right here. Perfect. So here was the shift. The shift was right here. The fair value gap is this one right here. And now the entry would be here, stop loss above, and take profit at 1 to 2. Okay, so again, we have a scenario where the take profit is lower than the bottom liquidity level. And now we ask ourselves, okay, can we travel this distance? Yes, we can definitely travel it, but again, this would be a trade that I wouldn't take. So yeah, of course you can have more trades if you take these setups as well, but I personally avoid taking these setups because from the backtest I did, I noticed that it is good to have the take profit within the range. Okay, so let's see. Okay, it triggered there. Let's see. It looks like it's a good reaction. So let's see. Ooh. Oh, I guess it was a loser. Yeah, it was a loser. So it was a good thing that we avoided. Like I said, over the longer period of time, you will see that it is best to avoid the setups that aren't clear. Okay, that's why I am very strict about it. Even though we missed two winners, we also avoided 2 losers. Okay, so yeah, let's move on to the next day, because at the end of the day, trading is about quality, not quantity. Okay, this is something that you need to be aware of and understand. Let's continue. Okay, we are here. So let's mark our levels real quick. I would say this is the upper liquidity level, and this is the, I mean, the lower one hasn't really been created. Yeah, because it's only one it's only one candlestick, so this is our lower liquidity level. But check this out, the upper one has been swept, and we can look for a market structure shift, but check the time, it's 7 p.m. It's the end of our session, and now we have 1 day left. Okay, we have 1 day left before we end the backtest and see the results. So 31st of January, this is the liquidity level. This is the upper liquidity level. Okay, and now let's see. Okay, the lower one has been swept, has been taken out. And now let's look for a market structure shift. Okay, so we do have a market structure shift right here, a imbalance right here, and the entry would be right here. And now the stop loss. Where would be the stop loss? The stop loss, I would personally place it here. Then take profit right here. Okay, let's see. Let's see if we have a setup, and it triggered right here. Okay, let's see. Let's play it. Oh, it was a stop loss. All right, so we have a loss as well. We have a loss in this backtest as well. I mean, I'm still very impressed about this this month of January. And also another thing to note is that we're only going to aim for 1 trade per day per pair. Okay, so for example, US30, we will never have 2 trades in 1 single day. Okay, it either takes the upper side or the lower side liquidity levels. It gives us the market structure shift. We take it and that's it. Okay, so 31st of January minus 1R. And yeah, this pretty much ends our backtest, our full month backtest. And it was a good one. I'm really impressed about the results we've had. So we had 4 trades, 3 winners and 1 loss. Okay, so 3 times 2 is 6R, minus 1, 5R. If you would have risked 1%, you would have made 5% only by trading this pair. Only 1 single pair, and also bear in mind it's January. January, it's a month where the volatility is low, and we still had really good results. Just to understand what this strategy can be capable of. I'm really happy about the results. I'm not gonna lie, I wasn't expecting this. And yeah, let me know if there's any question on this. So yeah, I really hope you guys enjoy this video. Until the next one, if you're interested to find out how I got into trading and managed to reach 6 figures by the age of 22, you should go ahead and watch this video right here.